Welcome to the Risk Reversal Podcast. Dan, Nathan, Guy Adami. It is
a vibe session.
All right, we're doing a vibe session. It's Thursday afternoon. It is 3:17. As Guy says, we're going to do a hot 30 here, people. Lots to talk about. S&P 500, Guy, trading at a new all-time high, 65.18. The VIX is trading very much near a recent, 1-year low, 14.33. We have a dollar. The U.S. dollar index, that's the Dixie guy.
Sure.
Below 98. We have the 10-year U.S. Treasury yield, 4.21%. It is sitting right on some important technical support.
Important technical levels.
Yeah.
Support levels.
I see a sea of green. We're seeing some stuff that hasn't been acting particularly well in tech acting well. We're seeing an Nvidia less than 24 hours from its all-important earnings report. It's basically flat on the day, guy.
Which is remarkable if you think about it. All right, so let's start with Nvidia, because I think that's what everybody's waiting for, not just this week, but for the last couple of weeks. We got through earnings season. We all came to the realization that earnings were probably better than expected.
Yep.
I'll give you that. I think in terms of what expectations were coming into the year, where we sort of finishing up this quarter, probably doubled sort of the trough expectations, but still below the historical norms, but as again, better than feared. With that said, Nvidia was a fascinating quarter to me because bulls are taking away the largesse of the numbers. The bears are taking away, like myself, are taking away, yes, we understand the numbers are historically large, but again, the magnitudes are getting smaller and smaller in terms of the beats and raises. And that's, to me, what stands out, because people say, well, look at the numbers. And my pushback will be, Dan, that is more than priced into a company now that trades with a $4.4 trillion market cap, trades on a valuation. It's actually getting expensive again if you start to do the math. And obviously, price to sales to me is a bit of a problem.
All right, so let's just break down that magnitude of the beat, because I think it's really important. You're still having expected growth this year of 50% year over year. What you're talking about is period over period, right? Mm-hmm. So we're having we're having single digit, maybe high single digit percent beats period over period. That's from double digits last year and, well above that over the prior couple years. Okay. So when you think about that, we're still expecting eye-popping earnings and sales growth. Next year is supposed to be 30+% for both. And when you think about that, actually, by the way, Guy, the earnings consensus went up to about 40% year over year for fiscal 2026. Okay. I think that's really important here. And then the sales growth has definitely moderated a little bit. And that's also what you're talking about. So you had this mild, very mild miss in data center. That's the all-important data center. You and I made this point. I think this is also important, not just because we made the point,
right,
but it's important when you think about the China stuff is going to continue to
messy.
It's going to be messy, okay? But the other point I would just make is that expectations weren't high, and they didn't get over those high expectations. So I'll also take it a step further. Microsoft, we talked about this on Market Call. Microsoft, Taiwan Semi, Palantir, these are stocks that have not made new highs since their earnings. They have not confirmed the new highs in the S&P 500. And maybe what we're seeing now is some sort of rotation into technology, but specifically within infrastructure software names. We have Snowflake that's up 18%, actually 21%. They're telling a good story about AI. We have a whole host of other software names, guys, that are screaming today. I'm just going to read through some of them. ServiceNow is up 5%. We have Twilio up 3%. We have Monday up 4%. We have Team that's up 3.3%. We have Trade Desk up 5%. I mean, the list goes on and on here. Datadog up 7%. What I think is going to be really interesting, next week we have Salesforce. The week after that, we have Adobe. These two stocks have been dogs. They're the ones that folks have been expecting disruption of by generative AI and agentic AI. Talk to me about software. What do you think?
Well, so when you think of software, the first name, well, there are a number of names you think of. I think people will point to Oracle. I'll go to Salesforce. And this is the name we've talked about on our different shows on Market Call. We've talked about it on Fast Money. I pointed to the April low in the stock, which was about 230-ish. Mm-hmm. The recent low that we made, I want to say in the beginning of August, first week of August, was about 230-ish. What we've been saying is that you have these nice little double bottoms to trade off of, and this is a stock that should bounce into earnings. Now, the problem with software, as we've both said, is they're getting beat on a sort of a two-pronged war. The first prong is CapEx isn't going their way. The second prong is investment dollars are not going their way. There are only so many investment dollars to go around, and it's clearly making its way into high-tech semiconductor names, which, you know what, makes sense given the run some of these names have. But these stocks have been left for dead, and I do think they're challenged, but I don't think, we've also been saying there might be some opportunity on the long side here, and it's sort of playing out. So I do think Salesforce and earnings continues to be interesting. We have seen bounces off the bottoms in a bunch of these names. And I do think you might start, it doesn't appear that way today, but I do think you're going to start to see a rotation out of some of these high flyers and in names where it's not that the valuation is more reasonable, but the stocks have been sort of left on the side of the road.
All right, so Salesforce reports Wednesday after the close, September 3rd. Let's just look at expectations for this year, 11% earnings growth, 11% expected earnings growth next year. Revenues expected to grow 9% this year, 9% next. Trading about 22.5 times this year, 20 times next. You can make the argument that this is one of the cheapest valuations that Salesforce has traded in an awful long time. It's down about 20% on the year, but it's down a lot more, Guy, from those all-time highs. And just from the 52-week highs, the stock is down 30% if I look at the all-time highs. And you may say, Dan, why do you care about the all-time highs?
Dan, why do you care about the all-time
Well,
highs?
I mean, again, it's just really speaking to underperformance. To your point about those levels, really, really important, except that we have reasonable valuation. Expectations are low. You have a beat and raise. To your point, Guy, this stock's screaming. Also on that night after the close is Figma. This was a very hot IPO. This is in the collaborative sort of design space. One of the reasons why Adobe has traded so poorly, they tried to buy this company for $20 billion. It got broken up by regulators. The thing went public at, I think, $33 in late last month. It traded as high, Guy, as $140. Here we are at $71. It's kind of flatlined there. Their earnings report, their guidance is going to be something really important. When you have a company coming out of an IPO like this, you expect them to save a little bit for that first report.
I agree with that. You mentioned a $20 billion price tag. You mentioned where it traded, I think, the first week of August, $143 basically, trading half of that now. So the question is, do you take a flyer on this one? The short answer is maybe yes. I mean, the valuation was set with that initial salvo, as you mentioned, from Adobe. You know, $34 billion here. We've seen this before many, many times where these companies say something that the market construes as positive and they sort of take the ball and run with it. So this is one at 70. I can't even believe I'm saying this, but you can play this one from the long side. Having no idea where options are trading, I'm sure vol is completely blown out in these names. You know, this is one you can play sort of with underlying stock, understanding how volatile it potentially could be on both sides.
Yeah, so it's about a 10.5% move in either direction. That's a tough one to play. But, you know, it's interesting. What might be the better play, Guy, is Adobe. So this is the stock, or this is the company that's meant to be disrupted by Figma, right? And so the stock now, Figma, you know, $20 billion deal they rebuffed, or that got broken up by regulators. Now it's a $35 billion market cap company. And I look at Adobe, which is down 50% from its all-time highs made in late 2021.
In November of 2021,
yeah. And so when you think about just this name in particular, I mean, it's barely seen an uptick. It definitely had a rally in the summer of 23 into late 2024. A lot of that was the story that they were talking about as it relates to generative AI. This one, Guy, it's either going to get absolutely puked, it's either going to be investors throwing in the towel, or they're going to look at the expectations of 12% earnings growth this year and next, and it's trading at 17 times this year, 15 times next. Expected sales growth of about 10% for each of those years, and I guess more importantly would be, in my opinion, margins. This is a company that has 89% gross margins. I'm far more inclined to take a shot on this one.
Historically cheap in terms of valuation. A stock that, as you just said, has been cut in half since its all-time high in November of 2021. No perceivable bounce off these recent lows. And the recent lows, again, like many stocks, in April of this year when it traded down to 330. And then again, we traded right back down there, I believe on August 11th. But unlike Salesforce, which has bounced not significantly, but a little bit more, Adobe, not so much. The question is this downtrend that's been in place now, basically, if you go back and look, since January of 2024, when it traded north of $600, Is that going to remain, or is that going to get broken to the upside? I have a really odd feeling about this one, that despite valuation and people trying to play a little stock market, we could start to be looking back to levels that we saw in the fall of 2022, and that gets you down to about 285 or 290, and that's not out of the realm of possibility. The bloom is clearly off the rose here in terms of Adobe.
All right, so would you rather Adobe or
I like that.
Would you rather Salesforce or Adobe? I think you're saying Salesforce here.
No, I think you're right. I think you connected.
I'd rather
well.
Adobe, by the way.
Okay, that's what. See, Bill. And Bill Hockman is here listening to this. That's what makes markets, and we're looking at the same things. We're basically coming to different conclusions. It feels to me like there's something wrong with Adobe, the stock. It feels to me like people are pushing on the downside in Salesforce, something that might not be there.
All right, so let's look at Thursday after the close next week, Guy. We have Broadcom comes out.
AVGO.
Yeah, so this
which makes no sense to me.
So, Guy, do you remember?
I used to like the BCOM.
Because they merged with the Avago.
Okay, so that means you got to take their. It's like you're getting married.
Yeah. So do you remember
and then you take. My wife is still Linda Snow.
Yeah.
She didn't, and I admire that.
Yeah.
I think you're going to see more and more people going that route.
I want my two daughters to keep their last name.
Yet
Nathan.
you made your wife turn into Sarah.
No, I didn't
Nathan.
make her do anything. By the way,
don't yell at
and
me.
she was Sarah Lowe Nathan, and now she's pretty much Sarah Lowe, which I'm perfectly happy
as opposed
with her.
to Curtis Lowe, which was a song from Leonard Skinner.
Oh, nice. You know what? We're not
Ballad
fans.
of Curtis.
Some of us
Curtis
are not fans of Leonard Skinner. Do you remember like last year people wouldn't shut up about the Mag 7, Magnificent Seven?
I don't think I've
it's
ever
not something
used that
you've
term.
ever learned.
I just
yeah.
don't.
So remember, like I actually had a different take on it.
You called it the Fateful Eight.
Right. And why did I call it the Fateful Eight?
Not fateful, because the fate of the market was determined by these 8 stocks.
Yeah, all of them had trillion-dollar market
Sure.
caps. Okay, so it was Apple, it was Nvidia, it was Microsoft, it was Amazon, it was Google, it was Meta, and it was Tesla. But at some point in late last year, Broadcom, which comes out.
I just said AVGO. Were you not listening before?
Okay. Remember when it
and then I said I used to like it as Broadcom, and you say, well, they merged with Avago, and then I said, well, it's just like when you get married. You don't remember that whole thing?
I do.
Please.
So remember when it became a trillion-dollar market cap?
I do. It was in December, I believe, of last year.
Correct.
It was December, if memory serves. It was December 15th or thereabouts.
Yeah, so the company identified a 2027 TAM of generative AI chips. They make specialty chips. Basically, they make chips for companies that want to do specific tasks. Okay, their biggest customers are a lot of those of Nvidia. Stock rallied 40% in
a day.
In 2 days.
2 days.
2 days.
That's unbelievable.
But from those highs that day, Guy, to its lows in April.
Went from 245, I'll tell you right now, to about 145 ish.
250 to about 145. So that was nearly cut in half. But from those April lows, the stock rallied 125%. Here we are, very near all-time highs. They report after the close on Thursday. And this is one where I would say expectations are high, Guy.
They have to be high.
And the applied move in the options market is about 7%. And here we are, expectations for earnings growth this year, 37%, 24% next year. Revenue growth expected to be 22% both of those 2 years. And, if you want to compare gross margins, because NVIDIA, it's been a big margin story, it's not just about their hardware, it's also about this CUDA software and this ecosystem. But Avago has 78% gross margins, Guy. That's the expectation, 77. You could make the case that maybe Broadcom is just as interesting as NVIDIA here.
Yeah, well, we used to make that case. If you go back and listen to all of last year, we would say many, many times that if you want to get exposure to the space, do it in the form of Broadcom, because you can make a very compelling case on valuation. That was true until we saw what happened in December. And then everything started to get a little weird. You mentioned the moves that we saw, but here we are now trading $310. I think valuation is stretched. They have to say everything has to come up roses in terms of this, especially margin retention. Otherwise, and you're going to be like, there's no way this is going to happen, but it's not out of the realm of possibility to see it back and fill to that prior all-time high that you just talked about, which is about 245, where we stalled, I want to say, in January, like mid-January or something of this year. So if I were long Broadcom, which I am not, but if I were long, I'd be moving my feet into earnings. And that means either selling some calls to earn a synthetic dividend, using the proceeds to maybe buy some put protection, selling a quarter, third, half of my position. Do something which will give you a level of flexibility just in case they say something that the street doesn't like.
Right. So we started this conversation also talking about where some of the major indices are. It is interesting that the NASDAQ has yet to confirm the highs in the S&P 500. Doesn't feel like it's long for the world below those prior all-time highs. Let's talk a little bit about the story of the week. I think other than Nvidia was obviously what's going on with the Fed, right? And so you have this Fed governor, Lisa Cook. There's been allegations. It started out with this guy Pulte, who's the head of housing.
Bill Pulte. Of the Pulte family.
Yeah.
He's the grandson of the founder of Pulte Homes.
This guy's a real turd, in my opinion. Okay, so we got to know this guy because he was all over the Twitter, right? This is like the epitome of a fucking Nepo baby, right? So this guy built a following.
Stop for a second. I don't know what a Nepo baby.
Bill, help him out here a little bit. It's a kid who basically is born into some rich or famous family. So nepotism. So the guy has done.
I understand. The Nepo baby.
So 2 or 3 years ago, when Twitter Spaces was a thing, he came on a Spaces with us, okay? And what he was doing at the time, he was buying basically a Twitter following because he was giving out free money to anybody who followed him because, again, Nepo baby, he had the money that his father and his grandfather made building a company, and he thought it was fun to just fuck around on Twitter and give people money for a follow. So he had this big following, and you and I were doing Twitter Spaces back then. We were calling them what? We were calling them what?
Trading Spaces.
Trading Spaces, which was a play on
Trading Places.
Right, which was a movie in the early 80s with
Eddie Murphy and Dan Aykroyd.
And
more importantly, Jamie Lee Curtis. By the way, Jamie Lee Curtis.
I know where you're going with
is
this
a
thing.
rocket.
Yeah, she was.
No. You're using the wrong tense of the verb.
Still a rocket.
100%.
All right, what movie, an action movie, did you enjoy her
when she
in?
was the Arnold Schwarzenegger one?
Yeah,
True Lies.
True Lies. Yeah. And you know Tom Arnold, he had like a he had a flash in the pan sort of thing. No. Great movie. Yeah, she is still a rocket. How's that? She is going to be in a Freaky Friday movie.
And it's out.
Yeah, is it out right now with Lindsay Lohan?
People like that. They say it's great.
Okay.
She's married to the guy that's in Spinal Tap, who I should know the name. Maybe Jacob can text it to me as we're speaking.
Jacob will do.
But one of the guys in Spinal Tap.
You and I are on different ends of this because the sequel to Spinal Tap.
Can't wait.
It's going to be a disaster.
No, I disagree.
It actually might
Sir
ruin.
Paul McCartney is in that. Elton John
Dude, you
is
do
in
not.
that.
All right, so I'm going to tell you this.
Why are you yelling?
Elton John.
You're mad at me again.
Twice
in 5 minutes,
John
Bill.
had a cameo in the second Kingsman movie. Okay, the first one was kind of interesting. The second one and his cameo were so bad. It actually ruined the movie.
Do I know this Kingsman?
Do I know? I don't know this Kingsman.
I don't know what he does.
All right.
How did we get on to
Nepo
this?
baby.
Oh,
Bill
sorry.
Pulte.
Apologies.
Okay, so he's buying this Twitter following.
Christopher Guest.
Who was amazing in the Saturday Night Live. Remember that in the early '80s? He used to do a bunch of bits with Billy Crystal. Remember they had a couple characters together. All right. So he buys this Twitter following. He's like this guy on Twitter. He comes on a trading Spaces with us. We had a huge audience when he came on with us. Seemed like a nice guy.
Yeah.
He goes into this administration and he's just flipping around claims of fraud here. No, that's what he's doing. And he's making these allegations on Twitter. So the president jumps all over this. Why? He's been covering at Fed Chair Powell. He wants him to lower interest rates. Pulte wants him to lower interest rates so they get the housing thing going again, all right? So then they dig up some stuff on this woman, Lisa Cook. She is a Fed governor. They want to get her out so Trump can appoint somebody so they can have a majority of the Fed governors. Then they can come after the Fed presidents. We know that Fed Chair Powell is going to be out in May of 2026. The president wants to basically take control of the Federal Reserve, lose the independence that it's had basically for a lot of reasons, okay? So our friend Wilfred Frost had Tom Lee of Fundstrat on his podcast, the Master Investor Podcast. It dropped on Thursday in your favorite podcast store. Tom Lee gave a very, very succinct kind of reasoning why the Federal Reserve should be independent. He says it's the most important institution on the planet because what they do and say There's a lot of stuff that happens, okay? So the idea that this Nepo baby is digging up dirt on a Fed governor, there's lots of potential repercussions as it relates to Fed presidents and the like. So are we going to fuck around and find out right here, Guy, as far as the Fed, as far as the Fed independence here? Because this is really important.
If you had told me all these things would take place, if you had told me a month ago, okay, I'm going to give you a little bit of a crystal ball, and this is what's going to be happening at the end of August of this year, where are 10-year yields? I've been, bond market's probably not going to like it. We're probably approaching 4.75%, 4.75%, if not 5%. And obviously, that's not taking place. The bond market is shrugging it off for now.
Yep.
But your broader point about the importance of an independent Fed and what it says to the rest of the world, I think is vitally important, because it's all a confidence game, right? People buy our debt because there's a confidence in the United States about our capital markets and the way we do things here. If that confidence erodes, it's not that people won't continue to buy our debt, but they will demand a higher rate of interest to do so. And I think that is coming to a theater near you. Also, in terms of be careful what you wish for, there's still this thing out there, the Twitter. I call it the Twitter.
Yeah.
I don't know.
You still call the Facebook the Facebook.
I do that. Yeah. I call Google. I mean, I just, I don't know.
Not the alphabet, not the Meta. Not the X. I see what you're doing.
I just,
You're old school.
A little bit. Believing that the Federal Reserve somehow controls interest rates is akin to believing that changing your place on the couch will magically impact the outcome of your favorite team's game. So people, like you've seen them. Your team is losing. They move their seat. Your team is losing. They put their hat on inside out. They think that somehow they're going to control the outcome. And by the way, every once in a while it works. Not because you did it, because your team somehow figured it out. And you're like, oh my God, I'm on to something. The Federal Reserve does not control the interest rates that everybody's concerned about. They control a very specific part of the yield curve. Everything else is controlled by the market. Of course, the problem is if we start to mess around with the independence of the Federal Reserve, the marketplace is going to challenge whatever existing Fed that we have, and they challenge it by selling bonds, which makes yields go up. By the way, and I'll hand it back to you, look what's going on all across Europe. I mean, the United Kingdom, the UK, all these places have been cutting rates. Guess what? Rates have been going higher on the back of it. They all have an inflation problem. They all have a genie out of the bottle in terms of what rates are doing. And I think that's, again, coming to a theater near you here.
So you're talking about long rates have been moving higher, short rates because the Fed indicating they're going to be cutting rates and the pressure that's being put on the Fed. So you're going to have this situation, and this is one of the reasons why banks really like it, right? So
for now.
Short-term rates are going down, longer-term rates are going up. It's good for net interest margins. The other thing I just say about that example you gave about sitting on, a certain side of the couch, your team wins or whatever, you used to, I think a few times over the last few years, you go to Giant Stadium, you wear your Daniel Jones jersey, number 8, and you were always sitting there waiting because he had a difficult time on many of these home games, and you were waiting for the coach to look up there and see Guy Adami in that number 8 Giants jersey and say, Adami, I need you in here. We got Daniel Jones. He's hurt again, or he can't complete 3 consecutive passes, that sort of thing.
If you're a 9-year-old or younger, what do you say? Have at it.
Have at it.
Have at it, people. You want to wear a jersey to the game? It's actually somewhat cute.
Yeah.
If you're like maybe a teenage young lady and you want to curry favor with your favorite player and you want to wear it, knock yourself out.
Yeah,
if you're a 60-year-old man and you're wearing your Don Maynard jersey to a Jet game, thinking that magically Weeb Eubank is going to call you out from the stands to catch passes from Joe Namath,
not happening.
You're a loser. Yeah. So do not do that. And I will tell you people.
You just took yourself back to like 1969 when you were 6 years old.
I've never worn a jersey.
Okay, it was a joke because
you know what people do now, Bill? People actually wear like Knick jerseys to a Knick game. Now, just so we understand each other,
just now
Knick jerseys do not have sleeves on them. What are you people thinking?
Yeah.
I mean, you think Pat Riley is going to say, "Hey, Bill Hockman, get your ass down here. We got to get you in the game." We want you to match up against, MJ. It's just dumb.
So here's the deal.
You started this, by the way, not me.
The other important news of the
really
week,
crazy.
We had the Lisa Cook situation, and you just kind of spelled it out.
All the football fans do it, too.
And Tom Lee
the European
spelled it
football
out
fans.
why this is so important to keep the sanctity of the Federal Reserve, the independence of the Federal Reserve. We're going to see what happens. Lisa Cook is suing the administration because they did fire her.
And she's suing Jerome Powell, apparently.
Why, really?
I don't know. I just saw the headline earlier.
That's interesting.
So she's going scorched earth.
So we had Nvidia and we had a situation with the Fed, really important. The third most important thing that happened this week, and this is going to tie into that whole Jersey situation here, okay, is that Travis
Kelce.
And
Taylor Swift.
T
Swizzle.
Okay.
I only did that to make you continue.
They got engaged.
Yes,
they got
did.
engaged, which is absolutely amazing.
Stop for a second.
Yeah.
Now, good for them. I'm all about love stories. Seriously. I think it's beautiful.
Yeah.
Like, didn't he wear what do they call those bracelets?
They call them like bracelets. They call them
No. But like when they go to the
bracelets.
concert.
Yeah, I wore one too.
Like he wrote his. What did you say?
This is where I was going with the Jersey
thing. He wrote his phone number, and he want to date you or something. Good for him. You know what? He showed
you
some
mean
chutzpah.
that's how they? That's how we
apparently
originally.
That's how they met.
Yeah.
But they were both decked out in Ralph Lauren. Did you catch that?
No. So it was like product placement.
Product placement, big time, Dan Nathan. You didn't think that was an accident?
No, but it's cool. Like they
Not
should
really.
get theirs. You know what I mean? Why not?
What? They should. Who should get what? Taylor Swift has done pretty well for herself. Good for her.
So?
She's self-made. Travis Kelce's probably made a couple bucks in the National Football League.
Won a few rings.
Yeah,
too.
he
He's
did.
got
They
some
don't need
big
to be
rings.
sporting Ralph Lauren wear to have
All right.
product
So a couple
placement.
things. Let me just bring it back for a second. Okay. So I have worn a jersey one time to a sports stadium in the last, call it, 20 years or something. I wore a Travis Kelce jersey to Wembley Stadium last June to a Taylor Swift concert. That would be the Eras concert. My daughter, who is one of the biggest Taylor Swift fans, made me a big fan. She made me a bracelet.
Oh.
You know what the bracelet said? It was from a song
Hard for me to
called
say.
All Too Well, the 10-minute version. And on it said, "Fuck the patriarchy."
The bracelet.
Yeah, it's a lyric from the song.
She says that in a song?
Yeah.
No kidding.
All Too Well, the 10-minute version. It's actually one of my favorite Taylor Swift songs.
Yeah, it's one of my favorites.
All right, so a lot of stuff happened this week. Guy Adami will not be called into the Giants opener.
No, nor should I be.
Okay.
There was a time in my life. I mean, listen, I didn't choose to go down this road, but since we are now going down it together, that I thought maybe I'd have a chance to play for the New York Football Giants.
Yeah.
Obviously, that didn't come to fruition. But mentally, I was there the entire time. Physically, obviously, I lacked a few attributes to get me there.
Correct.
Size being
All
one
right,
of
so
them.
this is either
Speed
going to
being
be
the other one. Because
this
I got to
is-
tell you something. I have some of the greatest hands you've ever seen.
This is either going to be our worst podcast
Well, I don't
or
know,
our
I don't know what that even
best
means.
podcast. I'm
We're
just
two
saying
people
one way or
talking.
another. All right.
Don't you call it? Don't you say we're potting and we're talking?
We're potting.
It's a conversation.
But this was our vibe. This was our vibe session of the week on the podcast. All right, so let's just finish it up here, Guy. We have an S&P that's going to close at an all-time high. It's basically 65.05. We have the VIX at 1430. We have a 10-year that, despite what you think yields might do, is about to fall off a cliff at 4.20. Okay, we have a Dixie that's below 98. The Dixie is the one that kind of gets me. Crude oil can't get out of its own way. Gold, Guy, 34.48. 30. It's been in this range. So if the dollar's going lower, if yields are going lower, if uncertainty about Fed independence is going higher, shouldn't gold be going higher?
Yeah. And it's not like gold is cascading lower.
No.
I mean, gold is just...
I didn't say
and
it
by
was.
the way, central banks now own more gold than they own treasuries. Think about that for a second. So
Yeah.
clearly something is going on. I have no problem whatsoever with the gold trade. The gold trade to me is alive and well. I'll mention a couple other things since you mentioned some of the highlights, some of the accolades, some of the things that are going on. Are you familiar with the late 1920s? I think so. That's when no, I'm just saying. Not that I lived
Can I
through
tell
it.
you, it was the end of the Roaring 20s.
Yeah, there you go. The late 1920s was in fact the end, but that was also the beginning of a period of time we call the Great Depression. There's something called the CAPE ratio, cyclically adjusted price to earnings, people call it. the Schiller PE.
Yep.
That peaked at around 32-ish in late 1920s. I think we all know what happened then. Currently, it's trading close to 39 and a quarter, which is second highest reading over the last, I think, 150 years. Wow. For perspective, Warren Buffett, we agree that he's a great investor, do we not?
Great investor.
I mean, he's on the Mount Rushmore of investors. Yeah. Something called the Buffett indicator. Mr. Buffett gets concerned when it's 125, 130%. That's the Wilshire 5000, which is all investable stocks here in the United States, divided by GDP, gross domestic product. I think they still call it that. Is
Correct.
That right? Maybe they've changed it.
No, that's it.
That is now currently trading north of 210%. There's a reason why he has $340 billion on the balance sheet. So none of these are timing indicators. What they are, though, is speaks to there is no floor here in terms of valuation cushion through those metrics and some others as well.
Yeah, no, that's great. And, there was one other thing. I think Doug Cass shared this with us, that it was a chart showing that there are now more ETFs in the U.S. than there are listed stocks.
Think about that.
Yeah. Talk about financial sort of engineering or creation or this and that. Whatever.
Alchemy.
But then you throw it in, and this is not just stocks, Guy. Think about a lot of these ETFs that actually have like private credit and all this other crap in it. All right, last thing before we get out of here. We just talked about gold. It's intact. Gold is actually approaching its prior all-time highs. It's been in this kind of long base or so. It really feels like it's going to break out at some point. Right. Longer the base, higher in space.
Outer space.
The other thing that we did not touch on is nerd gold. This would be the Bitcoin. So this is really interesting, Guy. So Bitcoin traded as high as, I want to say
123 and a half, I think, maybe 124.
Yeah. So, and then it's come off here. Right now it's
traded below 109 this week, and now it's trading 112. I move quickly, Bill.
Right. So what's interesting about this is that it broke an uptrend, Guy, that had been in place since mid-April or low. It was about 77,000 up to 123,000, like you said. It was a really nice stair-steppy sort of move. It broke that to the downside, but it bounced right at this basically 110,000 level, which is huge. The 200-day moving average is down there at, what do I want to say, 100,000 or so. So it really feels like this is heavy, okay? The dollar is weak, okay? So you put those things together. Gold is diverging, okay, a little bit from the nerd gold. That's what I'm trying to say.
And I think your point is well taken, and I think the market is not paying enough attention to it. Now, maybe because it's not a significant enough move, but over the last couple days at least, there's been this decoupling.
Yeah.
With the NASDAQ trading the way it is, I would have thought that Bitcoin would be making a new all-time high north of 125-ish and would be continuing this trajectory. It is trading as though there's a risk-off event coming. And I don't want to be too dramatic here because it's not like it's completely fallen out of bed. As you said, it's hold 110. But if you start to see it drift below 108, 107, no bounce, then you got to start to say to yourself, what does that mean for the NASDAQ trade? So I am not that I understand Bitcoin, because I don't, but I understand what I think it means to the broader market.
All right, no bounce, no bueno. And I think these treasury, situations where these companies and strategy is one of the big ones, but I think these are disaster waiting to happen.
That's the name of the pod. No bounce, no bueno. That should be the name of this podcast.
Well, there you go. I
don't
like
know
that.
what it means.
All right, I just want to make, this is one last thing here. So I'm sorry, I said the F word a few times on the pod.
Are you apologizing to me?
No, some
to
of
the audience.
Some of them may not be happy
maybe
with that.
we'll bleep it out.
I use the word a lot.
Okay.
And I know that it offends a lot of people.
Sure.
But here's the deal, people. If you're around in 10 years from now, this is going to be the way that we see streaming and linear TV and all that sort of stuff. This word is going to be ubiquitous. It's not going to be a word. The FCC is going to let me be. They're not going to have you like bleeping this stuff out. So I'm sorry. I'm a bit ahead of my time here. It's our podcast. I don't want anybody to leave
they make
because
it our time.
If it's your time and it's my time, is it our time? We should bring pizza in here every once in a while.
I don't like
Wouldn't
pizza.
That be good?
I'm probably.
What do you mean? You're Italian. You don't like the pizza?
I don't even know what that means. Because I'm Italian, I should like pizza.
You are the sort of guy. If this podcast.
By the way, earlier this week on CNBC's Fast Money, somebody said to me on the show, "Don't you make turkey parmesan for Thanksgiving?"
I did.
Turkey
No, we were
parmesan.
talking. No, that Brian Sullivan said something about.
Can you imagine?
No, he said Thanksgiving at the Adami house,
Right.
and I said, by the way, they eat turkey parmesan. But if this podcasting thing doesn't work out for you, you could go down to your local in
Butcher?
Morristown. No, your local pizza pie place. They could put you in the window, and you could just do that.
You know,
you could toss.
you say that. Didn't I work at Domino's one day? Do you remember this? I did.
And didn't you get? Oh no, you got the
flipped
employee of the day at Shake Shack when you worked there.
I got employee of the day at Shake Shack.
You were a Lyft driver. You were a UPS driver.
I was a helicopter driver.
By the way, you did that virtual reality thing.
I was out of commission for 2 days. No, that I should have closed my eyes through the entirety of the whole thing, but I did not, and it made me sick to my stomach.
All right, peeps, that was fun. Our vibe session. I love doing our vibe session each week.
Well, sometimes you look at me like I'm crazy because my mind works in odd ways. You just did it again. Because it's like stream of consciousness.
Bill looked at me.
You say a word,
that's why
and then a word triggers something in my head, and then I just go on this sort of ramble.
That's fine. The people are here for it.
Well, I hope they're
here
for it.
for it.
Jinx.
All right. Thanks, everyone.